Hi everyone, it's great to be here today. I'll spend some time sharing my thoughts on the current crypto landscape through a global lens and take a deep dive into some of Huobi's fastest growing business lines. Some of you may not know that Huobi is much more than just a crypto exchange. So I'm hoping you'll learn a bit more about what we do and how we fit into the broader digital asset ecosystem. I also have some really exciting news to share with you a little bit later in the talk, so stay tuned. Before jumping, I'd like to share a bit about myself. My name is Ciara. I'm the Vice President of Huobi Group for Global Business. I started my career in New York City working with the traditional finance industry, companies like Boston Consulting Group, Deloitte Consulting, and Ernst & Young. I spent years devising banking and capital market groups for major banks, hedge funds, PE firms, and investment management corporations. Traditional finance services is an industry I understood really well. But because I understood the space, I knew there were limitations. Traditional finance is rooted in a very old practice and biases, some of which have created a financial ecosystem that isn't always inclusive. There are also a lot of inefficiency and challenges that exist in the traditional finance. I know no industry is perfect, but it often left me wondering what innovations were on the horizon, which is how I started getting into blockchain and cryptocurrency. I eventually decided to take the plunge into crypto space and landed at Huobi. Having worked with some of the top financial institutions before, I wanted to join a company that has not only had the vision and ability to innovate the finance industry, but also the infrastructure to scale globally, like the companies I worked before. So that's why I chose to join Huobi. We move fast and constantly innovate with blockchain and digital assets, but we have many of the protocol and procedures in place that you'd expect from a multinational organization. This is the very essence of Huobi, and we place a high value on compliance, security, and customers' funds safety. So first, I thought I'd start by sharing my thoughts on where we are as an industry. This is a particularly exciting time for crypto and blockchain. Though we're facing a difficult time in the world, like the whole 19 situation starting the year 2019 and is carrying on to 2020, crypto adoption is accelerating at a rapid pace, and more nation states and regulators throughout the world are embracing digital assets like a necessary and legitimate assets class with the broader financial ecosystem. Crypto has become much more taboo than it was years ago. So let's take Japan as an example. It took the country years to clearly define its crypto asset regulations, and they're known to have one of the most strict requirements for crypto exchange and assets. But much progress has been made this year. Just this past May, Japan's FSA, a regulatory agency that now also oversees crypto assets, enacted new regulations to further legitimize compliant crypto exchanges and assets. We have been operating a local exchange, that is Huobi Japan, licensed since 2018 as one of the first few, and will continue to work with regulators to ensure full compliance with local requirements. And our HT token native exchange ecosystem Huobi has just begun trading a few weeks ago as one of the just 26 compliant crypto assets and the first ever globally platform token that is approved in Japan. HT can be now purchased with Japanese fiat currency. So I was really excited about this news. HT is just only is also the only global exchange token to trade on, which proves that there are opportunities even the strict regulations is in place. Japan is just one example of a key market where crypto adoption is growing in a regulated and secure environment, which is key to the industry's long-term sustainability and scalability. There's a common misconception among newer retail investors that regulation is bad, but is actually quite the opposite. We know that regulation, when guided the right way, can help drive crypto adoption and create a safer ecosystem for users. This is why we chose to work closely with regulators in every market we enter, and we try to be fully compliant. We also know that in order for crypto market to expand, we need to buy in of institutional investors and traders, which typically means ensuring they have a fully regulated trading environment as they have much more strict compliance requirements than retail users. So institutions are a key market for us in the global markets. So compliance and security are core to our business model. But taking a step back for a moment, we need to understand why crypto adoption is thriving in the first place, or at least why now. A lot of it comes down to the current state of global economy that was driven by this global pandemic. Though many parts of the world have started recovering, the effects of pandemic on traditional markets are going to be long-lasting. Central banks around the world have printed an unexpected supply of fiat currencies and artificially drove interest rates down as part of the quantitative easing. These kind of monetary policy measures come with high inflation risks, and there are concerns around crypto devaluation as a result. In this kind of macroeconomic environment, crypto, especially Bitcoin, is emerging as an alternative asset to help with inflation pressures and act as a store of value. One positive indicator of this is the growing interest from institutions. We're now seeing more institutional investors turn to Bitcoin as a hedge against inflation and an alternative investment, traditional safe haven assets like gold. Some big names investors like Paul Tudor Jones have come out in support for Bitcoin this year, and he said like he holds 1 to 2% that is Bitcoin in his whole portfolio. And we're similarly seeing spike in institutional trading volume across both our spot and our derivatives markets. So the other factor is that market volatility is going on. Due to this current macro events, volatility has become the norm for 2020 in both traditional and cryptocurrency markets. This has been a boom for crypto, particularly on the derivatives market with institutional traders. Volatility is a very natural part of the market cycles, and most experienced traders will agree that it offers potential advantages, opportunity to create arbitrage. So some people have become increasingly aware of how adaptable digital assets are. Early critics argue that crypto is not an ideal medium of exchange and is not fit for everyone transaction because of the value. But stablecoins like Tether, HUSD have shown that digital assets can and actually play a transactional role. And governments and central banks in particular are taking a similar approach with CBDCs or central banks digital currency. The most notable is China with the DCEP, which plans to come out of COVID-19 with its own digital currency. The Bank of England also leading collectively research into digital currencies, along with some of the world's largest central banks like Bank of Canada, Japan, European Central Bank, and also Swiss National Bank. All of this is driving new interest in crypto across all categories, retail, institutional, and government. So there's been a surge in adoption and trading volume. The landscape is heating up as we're just now getting into DeFi season. So we expect a lot more activity in the second half of 2020. Really excited about all of this. So at Huobi, we sit at the center of the decentralized digital economy. We're seeing record growth across all of our business units, like as crypto adoption rises at increasing pace. I mentioned in the part of decision that I have some really exciting news to share with you all. Amid all of this growth and ahead of our 7th birthday, we have really big updates planned across Huobi Group, including our spot exchange, derivatives exchange, institutional arm, Huobi brokerage, mining pool, wallet, so on and so forth. I'm excited to share an update on all of these, as well as a preview of what's to come this month. So this year, we have seen over 908 million in average daily trading volume on our spot exchange, 26.54% increase compared to the same time last year. But trading volume alone isn't what determines success. In the past 7 years, we've been around, our exchange hasn't been affected by a major security breach, and we plan to keep it that way. That's the only way that you can have a sustainable business model in the exchange world. If you lost thousands of Bitcoin every year, it's just not going to be long lasting. Just a few months ago, we launched Star Atlas, It's an on-chain analysis tool to monitor for bad transactions. Even as we see record trading volume and user activity, one continue to prioritize our user safety, and that's always our top goal. We're also proud that our exchange hasn't experienced any major outages during the extreme volatile moments, such as March 12th, which the Bitcoin price was really just collapsed by 20% in the whole day. When there are a large number of users trading, we'll be able to maintain uptime, unlike some of the other major exchanges, because we've been invested heavily into the backend infrastructure. On the derivative side, Huobi futures has seen nearly 80% growth every trading volume compared to the same time last year. Derivatives market are most active during times of extreme volatility, and we were able to use it to further improve our user experience. In an effort to protect our assets, Huobi futures roll out a new partial liquidation mechanism to prevent unnecessary losses in times of extreme volatility like March 12th. But we also know that traders don't just want hedge risk. They want ways to create arbitrage. So we followed up with launch of coin margin perpetual swaps, which has recently topped the market in 24-hour trading volume and by quarterly futures contracts. And starting July 1st, Huobi futures conduct an option beta test for preparation of option product launching in the near future. So this product have been craving by all of our users. I'm really excited to see that now is in beta. And by the way, our beta testing is going really, really well. On May 12th, the 24-hour coin margin perpetual swap trading volume on Huobi futures reached $5.47 billion US, which is 4% more than that of BitMEX, our most respected and biggest competitor in the same category, despite having launched their future more than a year ago. And just in the same quarter of this year, derivatives trading volume on Huobi futures reached $438 billion US, accounting for 22% of the total market trading volume, according to Token Insights. With Huobi futures, our goal is to help traders leverage any market environment to their advantage while minimizing the downside risk. We do this by implementing the best risk control in the industry, like various insurance hedge funds that prevent clawbacks. And we're really happy to say that there has been no clawback since day one. With both of our spot and futures markets, we're most proud of isn't just the volume we are facilitating. We've been able to provide users with a safe and reliable trading experience environment with little to no downtime, industry-leading risk control, and like I said earlier, zero clawback since day one. Like mentioned before, Huobi isn't just an exchange. One of our top performing business units is Huobi Pool, which is now the 5th largest mining pool in the world by hash rate distribution. 2019 was a good year for Huobi Pool, driven by strong revenue performance from our staking operations and rapid growth our cloud POW mining service. Operating revenue surged 547% in 2019, growing from 53 million in 2018 to 320 million in 2019. We've continued to invest heavily in the pool ecosystem, and we're excited about the division continued traction as we're expanding services globally this year. We're currently preparing Huobi Pool for the Ethereum 2.0 staking and have a lot of exciting things planned, like adding staking and mining services for 8 projects and node services for 12 more. Well, growth like this is always fantastic to see, both for Huobi and the market. It is more pleasing to note that Q1 institutional trading numbers this quarter are up 88% compared with Q4 2019. So we can pin down just where most of our growth is coming from. Institutional traders have taken up cryptocurrency like an asset with trading because of the numbers of factors. But it is also important to look at what limitations there still are to these traders, as the numbers we're seeing now are only the tip of the iceberg. So just to share with you more data on the institutional side, we started this institutional business unit in early 2019 to better serve traditional institutional clients with professional customer service and professional products that's tailored for their needs. And in the beginning, trading volume percentage from institutions on Huobi Global was only about 17 to 18%. And now, only a year later, trading volume percentage is up to 43%. So that's how big the increase is coming from. Another promising area with the Huobi ecosystem is our wallet, which is recently joined as a pilot member, also with the ETH 2.0 staking capability program organized by Consensus, our beloved and very important partner. Other key areas of focus for Huobi in the second half of the year include Huobi institution, brokerage, both of which are very essential to our global expansion strategy as we grow our institutional user base. There's some big news coming soon related to a new fund management platform and custody services, but we can't get into the details of here. Stay tuned to our announcements. 2020 is a defining year for digital assets and entire crypto ecosystem. There are still some barriers to adoption, particularly as it relates to institutions, like issues around compliance and regulations, but the future looks bright as regulatory agencies start recognizing crypto as a legitimate asset class. Compliance is always the core of our business model. So we'll continue to provide our users with a regulated trading environment and make it easier for institutional investors to trade and transit into crypto assets. A lot has been accomplished, but there is much more ahead. I predict that within the next 5 years, more than 85% of institutions around the world will have some exposure to digital assets in their portfolio, and I really do hope that it comes true. But in order for that to happen, there will be a need for regulatory compliance. Smaller exchanges that does not meet regulatory requirements will either just shut down or got consolidated as a result, which will create an even stronger ecosystem. Huobi was founded 7 years ago with a vision to bring digital assets and financial inclusion to the masses. We envisioned an equitable and borderless ecosystem powered by digital assets. Our exchange now serves millions of users over 170 different countries. Both our spot and futures exchange top the market in terms of liquidity, trading volume, market depth, compliance, security, and all of these key factors that define a safe and sustainable trading environment. We operate localized and regulated exchanges all over the world, both directly and through trusted local partners. Really glad to see that we've got a license in Japan, in Thailand, DLT license in Gibraltar. We are continuing to applying for all the license that's out there to provide our customers with a safe trading environment. So that's it for today. Thanks for joining us. And if you'd like to keep in touch, please make sure to follow me on Twitter at Ciara Huobi. Thank you.